Joining us now is Professor David Blake from the Cass Business School. He's been in the camp voting for Brexit, so he's been in the Leave camp. Professor, appreciate you joining us here on CNBC-TV18. You know, global equity markets, currency markets, commodity markets reacting to this result, which has taken everyone by shock and surprise. But Professor Blake, while some may argue that the economic consequences of the Brexit are somewhat exaggerated, the political consequences perhaps are not.
Well, that's right. I mean, in the short term, we will have this volatility. It's an overreaction. The market should have been prepared better for this, and had the British government and the British Treasury not made all these extreme shocks and talked about extreme shocks and managed expectations better, then we might not have had these short-term issues. But the political dimension is as your previous speaker said, and certainly in terms of the European Union, the citizens are being brought along into a political union that they did not voluntarily wish for or vote for, and the political elite have now been very surprised by the reaction of at least one member state that was never a fully signed-up member of the EU anyway. We wanted good trade deals, but we do not believe that you need political union to have good trade deals. You can have very good trade deals with the rest of the world. We are not able, for example, the UK, to have a good trade deal with India. We have to agree a trade deal through the European Union. We cannot independently do that. Now that we're leaving, we can have independent trade deals with India, with China, and the United States, as well as maintaining a very good relationship with the rest of the EU and having good trading relationships. But it's the political dimension and the bureaucracy of the European Union that is interfering in everyone's lives and telling people the kind of goods and services they can have. For example, we have vacuum cleaners that do not have a lot of intensity because of environmental reasons, and this top-down imposition is just not what the people want.
Well, it certainly is an opportunity for the UK to negotiate agreements with countries like India. The EU-India FTA hasn't gone very far. But in the short term, and that's still, you know, maybe at least 12 to 24, if not longer, months away, Professor Blake. But in the short term now, and I'm quoting to you what Paul Krugman has said to the New York Times today, saying that in the short term, Brexit will make Britain poorer. It's hard to put a number on the trade effects of leaving the EU, but it will be substantial. He also goes on to say that this is going to put a question mark in terms of investments because CEOs are going to hold back spending given the uncertainty. Is that not a reality, at least as far as the short to medium term is concerned?
Well, these are the scare stories that our Treasury have been making, that the IMF have been making, the OECD, the World Bank, and Professor Krugman is just repeating those scare stories. There is a presumption of continuity in international law that simply because you change the legal relationship between a group of countries, the rest of the relationship and the trading relationship, for example, stay in place unless and until both sides agree to change them. And the World Trade Organization says once tariff barriers have come down, they can't go up again. We have low tariff barriers within the European Union, and under World Trade Organization's rules, those cannot go up. So the Professor Krugman and all the global plutocracy are scaring the people into being afraid of the consequences, wanting us all neatly into this regional integration area called the EU because it's convenient for them, rather than reflecting the wishes of the people. It's incredibly undemocratic.
Before I let you go, Professor Blake, you talked about how the government should have done a better job, the Prime Minister should have done a better job as far as expectation management was concerned. But given where things stand today, and today we've seen whether it's the Bank of England or the ECB, global regulators coming out and saying that they will support the markets with liquidity and so on and so forth. What do you anticipate now, you know, specifically from a central bank perspective?
Well, those warnings or that message today by Governor Carney should have been made yesterday. It should have been made the night before. We didn't need to see this fall in the Japanese stock market as the first sign of this. you know, had the institutions in the UK, the Bank of England, the Treasury, simply could not believe what was happening, and they simply did not react quick enough. Now, inevitably, we now have these falls. We have bank shares falling by 30%, but we've now got investors trying to buy bank shares, and because they're oversold, and they can't do it because of they can't contract their brokers because the phones are busy. So you will get this short-term volatility that could have been managed better, but there is absolutely no reason why in the medium to longer term we cannot have a good trading relationship with the EU plus better trading relationships directly negotiated with all the other countries of the rest of the world than we currently have. And on top of that, we won't have all this bureaucratic interference from the people in Brussels.
Well, we will wait to see what transpires now. The vote is in, but Professor David Blake, pleasure speaking with you. You believe that the scaremongering as part of the Remain camp will not bear out in reality. It's time for us to take a break here on India Business Hour, but when we return,